let's have a look at our MT4 chart. So I've only picked up a couple of currencies here that I'm tracking, and that's simply because they're the major currency pairs and the ones that I like to look at as far as tracking the pairs. But for today, what I want to do is just have a quick look at a couple of the currency pairs. I also want to have a look at gold, crude, and the S&P, and we'll have a look at how the systems are running. We'll also have a look at coffee, which has been very interesting. So let's jump in straight away, and we have a nice little sell-off here on the US yen. So you'll see here that we've had a nice little break of a slight uptrend there, and that little second run up, but that spinning top there really was the start of this short, and it's continued lower. That's on a 4-hourly chart. The euro pound just consolidating there, so nothing really happening on that pair. The US yen, you can see there a nice little spike up, so broke out of that pivot triangle or the pennant set up nicely, and that's pushing higher. So there's a lot of movement here on the currencies, a lot of volatility, which is what we love. So the US CAD just continuing to break out there, nice little double bottom, and you can see there that initial sell-off breakout from that pivot, those trend lines really kind of made a lower high, and then it just took off. So either way, if that initial breakout was a kind of a false breakout, and then it just rallied beautifully. So the US Swiss, another sell-off there as well. You can see here that we've got a lot of volatility on these pairs. The Aussie dollar has been fantastic. So if we're tracking the Aussie dollar, that was a clear break of that main trend line, and just a short nicely down to 71.86, so a nice sell-off there. Picked up on the daily as well. The pound US dollar, that 4-hourly chart, if you're tracking the charts, definitely the 4-hourly chart is the one to have a look at as far as your setup. And I think I know Greg tracks that in his room, so definitely add that to your list of things to look at. Pound US dollar, yeah, it's still in that channel there. The New Zealand US dollar started to break, so if we put in a trend line here, which we will, let's add in our trend line there, and there's our support. Just a break there. You can see that candle there clearly breaks, and then we're looking to go lower there on the the New Zealand US dollar. We've already discussed the euro pound. The pound US dollar is consolidating, and yeah, that's just more of the same. So the other thing I wanted to share with you today is this EA, which is the pin bar. So I'm going to be sending that out shortly. The pin bar. The GMT pin bar. So when I do send that out, you'll have it obviously for 2018, and then I'll send 2019 when it ticks over, but I'll give you the password for that as well. So the pin bar reversal is just a nice little simple system. I've got a couple of set files there for you to have a look at, but I would suggest you do some testing on a couple of pairs yourself using the strategy tester, and pick a time frame that is going to suit you, and one that obviously the higher the better as far as the pin bar reversal. So I'll send that out later today, and you can just load that into your platform. So the way you do that is basically once you get the EA, all you do is you go File, you want to go to Open Data Folder, and you're grabbing, once you get Open Data Folder, it'll come up with the folder, the Forex folder. Go to MQL4, then go to Experts, and then save that file, that EA, into the Experts area. So you'll get two files that I'll send you. I'll send you the original pin bar reversal file, and I'll also send you the indicator. So with the indicator, all you do is you do the same thing, go into MQL4, then go into indicators, and save that into your indicators file. So it'll come up with GMT pin bar indicator 005. So once you've got that in, then you need to log out of your platform, log back in, and once you've done that, you'll see both the EA and the indicator set up. So you'll be able to access both of those. Alright, so I'm going to be sending out a few of the EAs, so that's the first one, and I'll send the password with that as well. So you'll get a password to add to that. Once you've added that in, it'll ask you for a password, and that once you add the password in, that'll activate the EA. So that's the pin bar. Now let's have a look. We've had a quick look at the as I said, the markets. We're tracking these. So just keep your eye on what's going on with the currency pairs. There's a lot of volatility there, and no surprises. The same can be said for the futures market. So let's go to a share here, and we'll just have a quick look at the futures as well. So if we go to the futures market, the first one I want to look at is gold. So I want to look at these Renko charts because they're really a nice way of, if it gets a little bit choppy on the 5-minute, you can see a nice profile on the Renko charts. So let's have a look at what happened at our 8 o'clock today. So if we mark in 8 o'clock and we're looking for a trade setup, and we know our timestamp is 8, so at 8:15. Now the reason why we're looking at this time slot is because this is where Greg's identified obviously a little bit of volatility every day in gold. There's either a move up or down 90% of the time. So you can see here we've got a nice little double bottom. Price is moving. Price was on the outside of the MACD BB, and then it strongly pushes at 8 o'clock or 7:30 back up. So that would be the catalyst to go long and take the trade, and then obviously we get a nice little rally up, and then the system gets us out for the system actually gets us out on that trade push up. So that's a nice little long, and then a rally up, and then getting out at the top of that. Now the reason why we would only be in that trade for a short period of time is that typically what happens with this move around that time of the day at early morning is that you get volatility one way and then volatility the other. So if we go to a time-based chart, which I'll grab now, so if we go to a 5-minute chart, you can see there's the volatility on gold. You can see a push up. So what happens here is that if we're waiting for that bar to finish, we're actually not getting we're missing a fair bit of that move. So time based sometimes is not a great way of getting into these quick moves on gold and other markets. So you can see there we have the push up, and then what typically happens is we have a move in the opposite direction. So we might get that cluster up, and then you get a reversal. So don't be surprised if the market kind of levels out again and we see a bit of a reversal. If we put the VWAP on, so if we insert a strategy and we add in our VWAP strategy or our VWAP indicator, so let's put that on. Where are we? VWAP. So we'll add that in. I'll take that. That's with. Let me just disable that one, and we'll just add in the standard VWAP. There we go. So what'll happen is that the market will try to get back to that level of the equilibrium point, that point of value. So if the market's trading below the VWAP on a daily basis, it's going to try to get to where the value of the market is. And the VWAP gives you an indication of where the value should be on price as far as the market. So if you're trading and you're watching this indicator and we're clearly below the indicator, then at some point the market's going to try to match up with that indicator. And conversely, if we're trading and the market's above the indicator, there'll be at some point during the day where the market will try to get back to that equilibrium point, so that volume weighted average. So always, if you have that indicator, you're looking for, that's a strong area of support resistance, so just keep an eye on that as well. But gold there, you can see, let's have a look at what happened the previous days. Well, we won't go to the previous day because that's our public holiday. We'll go here to the day before that. So there's our 8 o'clock. That's that holiday period, and then we'll go. You'll see as you start looking at these charts that on a daily basis we get that volatility around that 8 a.m. session. So price tends to be a little bit quieter, then we get that volatility. It probably shows up a little bit better on the Renko charts. So we'll go back to those. Now I've set up 2 Renko charts on gold. So we've got a, and if you are, like, I'm not necessarily suggesting that you trade off the Renko charts, but I'm suggesting that it's a good way of looking at the market as far as getting a clear picture of what's happening with the market. Because sometimes with our price-based activity on the time-based charts, it's a little bit difficult to see where the charts get a bit messy. So you can see here we're clearly long. We had that end of the trend yesterday and the sell-off, and then we came back to that area of support. So the 200 period moving average, if you want to set the charts up similar to this, you've got your MACD BB, you've got the 200 period moving average, and then you've got your 20 and your 50. So if you do, if you're new to setting up your charts, the best way to do that is to, I'm using an exponential moving average, so that's the 20, the 50 and the 200. And once you have those indicators on your screen and you've got the Bollinger Bands, all you do then is you just go to Save Analysis Group and you just punch in, give it a title, and then save that as your analysis group. And that way, any time you set up a new chart, you can just add that analysis group in and it'll automatically bring those indicators up. So as you can see here, what we've got is we've got price wanting to get back, typically tries to match up with that moving average. So once the stronger setups are where we see the dynamic support resistance around the 200. So anytime I'm looking at that, I'm thinking, okay, well if we push back to the 200, I want to see that, and then I want to see a candle in the direction of the major trend. So I'm not necessarily wanting to, this is for the continuation of the trend, I'm not always wanting to kind of jump in and trade that initial move, but this is very strong where you see the initial break of the trend, and then so we see a initial long, and then may not necessarily want to take that initial long, and then we look at that pullback and then back in, confirming the trend up. So what happens here is if you trade like that, if you don't take that initial breakout every time, you're going to have a higher probability of trades going your way, and you're going to have less risk in your trades because your entry and your stop are going to be a lot tighter. Whereas you're going to miss probably some pretty explosive trending moves if you don't take the initial cross of the 200, the 50 and the 20, but you're going to not get caught in a lot of chop as well. So you'll find that if you look at a lower time frame chart on the, so if we go to the Renko 0.5 and 1, you'll see it happen quite a bit. So it'll show you where there's the initial trend move that crosses the 200, the 50, and the 20. So that's the initial long, and then it pulls back, and then there's the second cross with a nice little support there, and then that's a nice rally up. So if you're looking to use this as your potential time frame indicator, or you're looking to determine the trend, then my suggestion is that you use that as your confirmation of the trend. So you get the initial push up again. Here we see it here, initial push long, then we get some resistance, then we get that second push up, and then we're looking to go long again. So if you go through and look at the charts like that, if we say there's the initial push short, fails against the shorts off the 200 period moving average, then we go short again and we're short there. So that's just a nice easy way of framing up the market, isn't it? So there again, so it doesn't work every time, as strategies won't work 100% of the time, but this saves you, like if you were to take this initial short first up, then you'd be knocked out here. But if you waited for the confirmation, you're not gonna go in there. You're gonna go in on this this second turn down, and even if you take the short there, you've got you've got a level of support, resistance. Sorry, this initial stop that you can use. That's slightly higher than I would normally use as an initial stop, but it's still a reasonable area to put your stop. But here's an example of why, when you're going to miss the bigger trades, although not necessarily so. So if we're looking at there's the initial, we miss an initial short there, so we didn't get across. So there's a retest of because remember, you got to work out what market we're in. So we're in a bull market, so we get some consolidation and a retest of that 200 period, then we're long again. Then we're looking for a short. So for us to get a short, we need to cross and then cross again. We don't get it there. There's a long. So that's just another catalyst or another indication for us to go long. Another potential pullback to go long. Then we look at the short, and then that's just another catalyst to go long again. So you can see it does a pretty good job of picking the trades of when to go long and short as far as the market. You can see there that sometimes you'll get a little bit deeper pullback and the trend isn't confirmed. So there we see an initial short, but there's no cross of the yellow 200, the yellow 50, sorry, and then the 50 crosses there. So there's our first short, but it's not confirmed, is it? So then we're back long again. So yeah, that's just something I've been kind of looking at, and it seems to be quite powerful. So we'll talk a little bit more about that as we roll on. So guys, the charts today, another interesting day on the charts. We've got crude oil pushing down strongly. If we have a look at all charts, the daily charts, you can see that the US 10-year notes are rallying strongly here. So 121.7, and again we've got selling in all markets. The ones that the markets that have consolidated are soybeans. You've got crude oil down again today, and gold is rallying up to that 200 period moving average, so we'll keep an eye on that. Coffee is one of the more interesting. Coffee, obviously gasoline, but coffee is interesting because it's given us another short again today, so it's just really delivering some nice profit. So if we have a look at coffee trades this week, we've had 3 trades on coffee, and we're so far 100%. So last week we had 2 trades, one trade was a small loser, and then but delivered some really good profit. So good market as far as performance at the moment. It's making new equity highs, as you can see there, and just tracking beautifully. So this market is really delivering some good overall profit on a weekly basis. So you're hitting that 2 to 3 trades, not too many. We had an increase there of 5 trades one week, but generally it's 2 to 3 trades, and it's around that $1,300 mark. So it's been very consistent over the last 4 or 5 weeks, and you can see there the losing weeks aren't too bad. We've had a couple of initial stop outs where prices move quickly and then just taking us out almost at break even, but it seems to be picking up these trades very well. So we'll keep tracking coffee, and as I said before, it's a market on close system, so we don't want to be holding coffee overnight. Why do you think we wouldn't want to hold coffee overnight as a strategy? What's wrong with holding, say, a market overnight, especially a commodity market? It's not necessarily a bad thing, it's just that what we want to do is avoid that limit up, limit down order. So if you've taken this short position here on coffee and it limits up, and you can't close out your trade, then the market will close, and there'll be restricted trading, and then it'll open it again at say for example, it'll open at a price where you can't actually get out at the current market price. So you've got to be very careful. You won't be able to exit at the time you want to get out. So you've got to be a little bit careful of these volatile market conditions. So anytime you're trading like that, holding overnight, particularly if there's a dramatic news event or something like that, and the market and the community, or the market and the trading community's had a chance to kind of look at the news, and then we get an open, then we gap up or gap down. They're the things that we want to try to avoid. That's similar to the DAX as well. Ideally, you don't really want to be holding contracts on the DAX, because you've got the market closed at 10 p.m. then opening back up at 8 a.m. in the morning. So that's too long a time for news events to affect the overall market. So we want to try to avoid that. But as I said before, coffee setting up a nice little trade today. Gold and coffee setting up nice little trades today. The Euro futures, kind of a little bit. We got knocked out today, just a slight profit, but we ideally would have liked to have got that trade out at around 114.20, but that trailing stop knocked us out a little bit higher. And that's pretty much what I wanted to go through today. So some good volatility in the markets. Crude oil starting to show some nice little opportunities on it as far as volatility again as well. So on the 5-minute chart, just pulling out some nice trades. Nothing too dramatic on that system, but it's doing really well. So keep an eye on crude oil as far as a strategy as well, and a market to trade, because the volatility's up. So if we go back to the daily chart, you'll see that one of the things we want to make sure, if we're looking at our volatility index, is that if you are trading it, and you'll get slippage, and last couple of days on our main account we've had a couple of points of slippage, so just be careful about that for your contracts and trading futures with volatility so high. And that volatility stochastic is an indicator that you can add to your charts, and again I'd probably look at doing that. When it's hitting up at that level, you're going to probably find that you do get a bit of slippage, and crude is one of those markets that's renowned for that. So just keep an eye on that. Like, it's good to have, obviously, you're getting a system that's performing well, but you've just got to be careful of watching how much slippage you get, because you don't want to get into a situation where the volatility spikes, you're getting some really good trades, and then the slippage hits you, and then you have a couple of losing trades, and you go from losing 2 or 3 points of slippage, which is not good. So that can be $30-40 of slippage on a trade. So if you've got a negative trade, that's just going to compound your overall performance. Alright guys, so that was just a quick update for our markets. As I said before, I'm sending out that MT4 EA today, so that'll be the pin bar. I'll shoot through a video tomorrow just on what's involved in the pin bar, the settings, so you can actually have a look at that and start kind of playing with that. You can do a little bit of testing yourself. Pick a market. There's a couple of set files there that I'll send out as well, which are now set files, for those of you who are new to MT4, are very similar to your TradeStation workspaces that have been customized. So a set file is a file that has the best settings, so it's your optimal settings for that particular market. So it might be, say, a set file on the US yen, based on the pin bars that are setting up on that on a certain time frame. So I'll be sending that out as well. So guys, that is it. I'll try to get a couple of these new EAs out for you to kind of have a look at. So if you're tracking the currencies on MT4. And the other thing I'll be doing is I'll be giving you an opportunity to look at the currencies on the futures as well. So I'll send out a couple of workspaces on the Euro futures, the Aussie dollar futures, just so we've got that option too, because I know not everyone wants to trade and I'll just do that share. I know not everybody wants to trade the currencies on MT4. We've got traders who prefer to trade futures because of the market access, and that's not a bad thing. So alright guys, thank you for your time. We'll be back again next Tuesday. So these sessions will be Tuesday, Thursday US time, 12 noon. I'll be recording them, and we've got our Australian session at 8 p.m. Australian time. So probably do 4 sessions a week, and then we'll do a session on the Sunday. So thanks for your time guys, have a fantastic week, and we'll catch you on the next update. Cheers.